Welcome everyone to the webinar on revenue forecasting. I suppose that's not easy to say. All right, I hope you guys can all hear me, and let's go ahead and get started. My name is Brigitte Hippel. I will be talking about revenue forecast today. If you have any, thank you, my webinar works. That's just to give you a sign of what the webinar should look like today. I did have my coffee, by the way. So if you do have any questions, please do not hesitate to ask. I'll be happy to get to your questions. If you have very specific questions about your project or the way that you're billing or the way that you want it to show up on the forecast and it's not working the way that you thought, then I would highly suggest setting up a call with your account manager to be able to go through the details and the options, because of course within Workamajig there are a lot of options on how things are generated, how things are displayed, and even those options on how you want this displayed. So I'm going to go through the basics of the purpose of the revenue forecast. Oh my gosh, I almost did it again. Of the purpose of a revenue forecast, the setup of the forecast, and the options that you have within the forecast, and then even how you can create a financial budget from your forecast. I'm not going to go into all the specific little oddities and options that you have. I will point them out as we go along the way, just that, hey, here's another option if you wanted to look into this further. All right. So as we begin, for those of you who are very comfortable with our help guide, we do have in our help guide the revenue forecast. It goes through the overview. Then it'll go through the setup, which is generally the same things I'm going to be going through with you. What happens when you create that new forecast, and then how do you manage that forecast? And so let's kind of talk about even the purpose of a revenue forecast. So if I come down to my Accounting Today page, under my views, I've got revenue forecasts. And when I go ahead and let me search just for my one company out here. When we look at a revenue forecast, it is really meant to, actually, let me close that and reopen it. If I reopen it from my recents, it actually opens up a little bit wider. So if you're ever wondering why I do that, it's just that it gives me a much wider screen, as opposed to, it kind of shrinks it down when I first click on revenue forecast, show me the revenue forecast, then I get a smaller screen. So then I tend to close it, go back to my global search, open up my revenue forecast from there, and it does open up wider. So let's first talk about the purpose of a revenue forecast. Purpose of a revenue forecast is to take your anticipated budgets, your estimates that have been approved, or in some cases, if there are opportunities or potential projects, they're not yet confirmed by the client yet, not yet a signed contract, we can take that budget information, and based on either a billing schedule, the number of months, or a project schedule, we can spread that revenue out into the next 12 months. So this way you can kind of see within a forecast, based on just budget information only, what is my anticipated revenue if I had all these different projects, campaigns, scheduled invoices, retainers, etc. This is that anticipated revenue that I'm going to get per month. Okay. Now, it is really meant to be a snapshot. Now, you can update your forecast, and we're going to talk about all of those options once again within the forecast of what I can do to update it. But really, the purpose is to say, if I'm taking a forecasted look at, based on what I have in my pipeline and what we're currently working on in production right now, as of May 22, this is my anticipated revenue. This is my total, and this is how it spreads it out over the various months. Okay. Do I tend to update this when I get to June, July, August? No. I would instead create a new forecast with my next starting month being June, or maybe even I can, keep it and back in May, but it's really meant to say, okay, now that I'm in June, how much has changed? And I can do that comparison between looking at what do we have in our pipeline for anticipated revenue for May? And then now that I'm looking at it for June, how much has changed? How much more have we brought in? Do we have any new additional projects or potential projects? And it also gives me that opportunity to kind of look out into the future and say, I think I need to get my sales guys going for the end of the year because I'm a little light on revenue. And then I'm really just taking these snapshots of what my revenue is or anticipated revenue is for that next 12-month period. And I kind of create these, what I would consider a rolling revenue report. Can you update an existing forecast? Yes, you can. But you really want to say, hey, when I looked at this back in May, I'm looking at August and I've only got 104,000 in there. But now that I rerun the report again for June, hey, we've had our salespeople has really been working on this. And now we've kind of extended our, revenue or anticipated revenue all the way out to November. So this is great. This is the trend I would like to see. Okay, so hopefully that makes sense as far as what the purpose is on creating this forecast. It's really to be able to take my various items here and kind of look at that budget. So let's talk about some of the system setup. There are a lot of little intricacies based on whether it's a campaign or a project, retainer, scheduled invoices, whether it's fixed fee, whether it's time and materials, all of these play a little part in how it shows up in your revenue forecast. Let's start first with our system setup when we're under global lists, project status codes. Okay, this is affecting my projects. Of course, a campaign doesn't have a project status code on it. Opportunities don't have, retainers don't. So this is really the first mark on how to set up my projects in order to feed into my revenue forecast. Okay. We've got our different project status codes. In there is a field called include in forecast. So if I have projects that are currently in estimating, or in production, or for me, I have forecast production. I needed to kind of set this one apart. These are the ones, the projects that are going to show up in my revenue forecast. Okay, so it's based on project status code. That to me is like the first gatekeeper for my projects. So let me go back and look for a moment at this forecast. And one of the things I kind of forgot to mention, and we're going to definitely go into this in more detail, is if you notice what I have in my forecast are these items or these types. I can bring in campaigns, whether it's an approved campaign or a potential campaign, and we'll talk about the difference between approved versus potential. I can bring in approved projects versus potential projects, scheduled invoices. I can bring in my opportunities, and then I can bring in my retainers. So these are the different types of items that you can bring in to your forecast. Now, when you create a forecast, you're going to be able to select whether you want to bring all of those in, all of those various types in or not. Okay. So back to project setup. The project status codes are the first gatekeeper for your project. So if you have a project and you'd like to bring it into the revenue forecast, it needs to be in the correct status. If the status says include in forecast, then that's kind of that first check mark that the revenue forecast determines as to whether it's bringing it into the forecast or not. Okay. Next, the system will look at its billing method, because what it needs to do within this forecast when I'm looking at a project is it comes in and looks at the project status code, of course, and then its billing method. Okay, the billing method is going to tell the system, am I spreading my revenue, my anticipated revenue, so I need that estimate in there. I need that approved estimate, or at least an estimate in here. And it's going to take the amount from my estimate. And if I'm time and materials, or if I'm billing schedule or a billing method of fixed fee, then it's going to change the way it spreads the revenue on those months. Okay. If I have an estimate and my billing method on my project says fixed fee, then it's going to be looking for a billing schedule to say, okay, you've told me you're not billing actual transactions, you're billing your budget. How do you anticipate billing that amount? And that's what's going to be showing up in each of your various months based on your billing schedule. If my project says that I'm actually a time and materials project, I still need to have that approved budget in here. But what it does then is it uses my project schedule, because it assumes you're going to be billing actual time and materials, and you're going to be working on this based on these dates within your schedule. And based on your estimate and how you've set your estimate up, it's going to spread that revenue based on the number of months you have in your schedule. Okay. That's basically what it's doing for an approved project. Now, when we come down to potential project, the only difference between a potential project and an approved project is it goes through the same check. Is your project status in a status that says to include in forecast? Great. What it's going to look for then, a potential says, I have an estimate, but it's not yet been approved. Might still be in the pipeline. We might still be working on it. Not sure if they're going to sign off on this estimate, but in your estimate, there is a estimate settings in here. It has include in forecast. So you may have 3, 4, 5 different estimates going on with your client, and you've tried to pitch one and they didn't like that. And now you're pitching the next one and you think, you know what, this is the one I think they're going to go with. And I'd really like this one included in the revenue forecast. So I'm telling the system, go ahead and take this specific estimate, include these amounts in the forecast. And then once again, if I'm, it's going to treat it more based on the schedule you have in the project, because you probably don't have a billing schedule yet because of the fact that it hasn't been approved. Now, once again, to me, that idea of that snapshot of this revenue forecast, hey, in May, we thought this was the estimate that we had included. However, come June, we actually got the signed estimate, and now that approved estimate becomes actually an approved project. So potential means that my estimate is not yet approved, and I can't really consider it as a project in production, but we're still working on it and we're still trying to get those numbers finalized. But if that estimate gets approved or a different estimate gets approved, then basically it comes and moves itself up to approved projects. So that's kind of the philosophy between being able to see, hey, I'm working on these projects in production. This project is still in the pipeline, trying to get that signed contract. Like it included in my forecast, but it's not the same as an approved project. All right. Any questions so far about kind of, the difference between what we're considering as an approved project versus a potential project? Now, we're definitely going to be looking at how these numbers are all created and what you're seeing within there. But what I'm hoping to do at this point first is to just show you the various types of items that we have in this forecast. Okay, so that takes care of approved projects versus potential projects. Of course, we have our typical opportunities. I go and open up an opportunity, and within that opportunity, so if you happen to be using our opportunity section, once again, it's not something that's approved. It's not currently in production, but, some of my clients will open up a potential project and not use the opportunity feature. Others will say, no, we use the opportunities, and then once it gets awarded, we make the project live. So if I have an opportunity, we once again want to categorize these different than what we're already truly working on through our production. It's not a guaranteed revenue at this point. If I'm looking at a basic opportunity, we're really looking at that forecasted amount, that total revenue down here. It might be a combination of labor and production costs. And then what it's doing in order to spread this out is we're looking at the number of months and that probability. And so it's taking those amounts in there, but really it's once again putting it in its own category. And we'll kind of talk about these two other options when we get a little bit further into this. Okay, but that's if you utilize the opportunity section, you can bring those in. Once again, they can be typed differently than what we have in production. I have a few clients who actually have scheduled invoices, and a scheduled invoice, for anybody who's not used to those, is I have a client that needs to be billed, and it's basically like a fixed amount, or maybe I might change the amount a little bit each month. I might create the invoice not approved so that I can kind of adjust the amounts, but it's really just saying, hey, I created an invoice that I needed to look in a specific way with specific accounts and specific details in it, that I don't want to recreate the wheel every single month when I have to bill this client. So instead I create the original invoice for this client and for this project, and then I go and create a schedule so that it automatically reproduces and says, okay, you've got 7 more that you've got to create for this period, and the system will go ahead and, either based on how you set this up, auto generate those invoices. And whether they're auto generated, approved, or posted or not won't matter to the revenue forecast. The revenue forecast says, I'm just going to look at the fact that you have a scheduled invoice. It's a guaranteed, it's kind of like a retainer. It's a guaranteed income that you're going to be sending this out. And I'm going to be putting that in for the number of months that you're running this scheduled invoice for. Okay, it does not show the project on here. So where all of these others like this will show the actual project number, a scheduled invoice can have multiple projects on it. So if you're looking for specific project information on this, then you may want to set up separate scheduled invoices, or actually just do a fixed fee type of thing. So the scheduled invoice will never show you the project number because you can have multiple projects on one single invoice. Okay. Retainers. Retainers are the next easy one. Of course, if you happen to set up a retainer within the system, it's going to look at, the frequency of that, how many periods, what's the amount per period, and it's going to be basically putting that retainer amount in. Is the scheduled invoice different than a billing schedule? Yes. I'm going to say yes and no. I know that's a kind of a wishy-washy answer. It serves the same purpose. If you have a fixed fee or even a retainer, and that that you're going to be billing, like this retainer, I'm going to be billing $2,500 a month. Well, some clients have a retainer where they need that retainer to actually split into more than one income account, or it's got to say specific details on the line every single time. So on a fixed fee or a retainer, you can let the system generate the invoice, but then you have to go into the invoice and kind of make the minor changes and set the line subject to what it needs to be, add the details that are supposed to be there every single time, and you can do that. That's fixed fee. Billing schedule still bills the same amount every single month. Scheduled invoice says, I already created the invoice the way I need it to look, with all these specific line subjects and the way the detail is set up, and posting to these different GL accounts, income accounts, and that's the way I want it created every single time. And I don't want to have to reinvent the wheel every time the invoice gets created and make these changes. Let me just go ahead and create an invoice and schedule it. As long as the scheduled invoice has the project numbers on it, it's still billing the individual project. Okay. Is there a way in the forecast to manually add an amount each month for each client versus pulling from the billing schedule or the schedule on the project? So using the screen and just manually entering a number for each month? Yes, there is. So I'll go ahead and show you that and how you can add additional amounts, whether it's labor or expenses, for a specific client. Okay. Any other questions at this point? Let's see. I apologize if I missed the things at the beginning, but will this be posted somewhere soon? Yes, the revenue forecast webinar. So when you look at the webinars in here, after they've had a chance to process, they will be posted in the webinar section for any of these past webinars. So sorry to see you have to jump off, but I understand the posting will be there. I would say give it at least a couple of days before it gets posted to the help guide. All right. Oops, I think I missed that one. Perfect. All right. So that's the retainer option. Okay. So then the only one that we have left is campaigns. Okay. So you have the option, and this was a change we made probably, I think, about a year ago, where now you can actually be billing a campaign budget. I've got a group of projects that are grouped together underneath a campaign, but I don't bill the projects. I actually bill the campaign budget. That's what we have here, where this is actually billing the campaign budget as opposed to billing the individual projects. Now they can show up in the revenue forecast again, whether the estimates have been approved, or here the estimate has not been approved, but we check the box to say, this is in the pipeline, we think it's coming, this is the estimate we think that's going to be happening on. I'd like to go ahead and include this potential campaign. All right, so let's go through and kind of talk about how we create a revenue forecast. Okay, so on your Today Accounting page, again, under the View section is the revenue forecast. Under the plus button here, you've got the revenue forecast. And then also too, later at the end, we'll kind of quickly touch upon financial budgets. Whether you use this plus sign, I always love to promote this. Sometimes you're not on the Today Accounting page. This plus sign works the same way, except where you can quickly come down and say, okay, maybe I'm on the Today Purchasing page or on the billing page or some other page, and I'd still like to go ahead and create a revenue forecast. And if you're like me, I tend to make a lot of projects, receipts, vendor invoices, and client invoices. So I have moved them up to my favorites by just clicking on the star, and that moves them up to the favorites right at the top. So I can quickly and easily add these types of items without having to scroll to the bottom. Okay. All right, so let's look at that revenue forecast. So of course we have the title. Now I tend to prefer that you use the date for the title, and I'll just show you in the listing view why it kind of makes a difference to me. So, you know, when you come over and look at revenue forecasts, and let me just search for my one, you know, it's easy to kind of see when they were made. Now I pulled out the date created field. So if you do name it by something else, you know, maybe you've got a specific one for a specific company, or, you know, you're only running this for a specific client or specific types of projects. Again, maybe I'm not including anything in the pipeline. So you can add that to the name. And then I would definitely probably have the date created field out here so you can view and see which ones you lately created. For me, the forecast name is just easy for me to see. This was the run I ran in October, November, you know, so forth, so that I can easily pop them open and kind of do that comparison and review. Okay. And let's come down and go to the revenue forecast screen. Now, when we go ahead and look at this, so I'm going to go ahead and say this is my May, although I've already done May, that's okay. I can call it May, you know, number 2 to look at. For me, I have multiple companies on in my test account, so I'm going to be doing this for my forecast company, have a lot less detail in there, so it's easier to kind of control what's going to display. My starting year, of course, I'm looking at this year. For those of you who actually create projects well out into the future, You know, you can start this for January of 2023. And we've got this year already figured out, not a big deal. We're already looking at next year. So you can set that starting year to be next year, starting with January. So then it goes the 12 months from whatever this starting month is going to be. These are all those different types of items that we had included. So if you decide that you want this only based on everything that you've currently got in production, you know what, I would not include then opportunities or potential projects or potential campaigns. And that way you're looking at just everything that we've currently got in production and that we're working on. Okay, so you have the option to kind of cherry pick through these. We're going to come back and talk about expenses. Right now, I'm going to leave this as evenly, and we'll kind of, once we start looking at the different types that we have in the revenue forecast, we're going to see how those expenses are affected. This is one of those unique little options to kind of do something a little bit differently. We're going to talk about that a little bit more detail when we start to kind of look at some of those other options. But as a basic thing, when we create a revenue forecast, we're going to be looking at time and material projects as time and material. We're going to be looking at fixed fee as fixed fee projects and basing it really on the billing method of the project. This is an option to say, I may set my project up one way, but I want to forecast it in a different way. Okay, so we're just going to go with the basic way first and say we're going to go with whatever the billing method is on the project or campaign, and then we do have an option to say I'd like to run this forecast just for a specific client. Okay, but right now we're just going to run it for everyone, and when I scroll down you're going to see that save button. Now it does take a moment to generate, especially probably more for you guys than for me because of the number of items and the calculation that the system has to go through. Okay, let's look at some of what we're seeing within this forecast right now before we get into kind of the nuts and bolts of how this is created. We have an option here that, you know, we're looking at how we spread those expenses. And basically, we're going to kind of talk about that, but you can change that option if you've got that in here. This is the name. So once again, if I want to change the name, if I start to realize, yeah, this is getting confusing, trying to figure out which one came first or what it is, you can always still come in and change the name. I like to group it by type because that shows me my campaigns, approved, potentials, etc., setting up that this way. A lot of people, of course, when they're actually looking at their data, may come in looking at it more by client. You know, I'd like to see what my clients are doing. And then, of course, I can see what the billing method is, or the fact that it's a scheduled invoice, or the fact that it's a campaign. So there's not really the same type of billing method, you know, so I can still see these are my time and material projects. And at the end, all the way out here, I can still show the type as a column field displayed. So it's not like I've lost that information. I still have it just in my grid form instead. Of course, you can change it to group by account manager because sometimes that becomes more important. Group by office, depending on whether you have offices or not set up. So I'm going to go ahead and switch it back to group by type. Okay, what you're looking at within here, of course, is you've got the name of the item, whether it's a campaign, an invoice, retainer. I've got the month that this actually started. I've got the number of months that this is going to be spanning. So depending on whether it's looking at billing schedules or it's looking at project schedules, or for opportunities, it's looking at the number of months set in the opportunity. Okay, it's telling you how many months it's going on for. If there is a billing method, which really only applies to projects, we talk about the probability. The only time that the probability ever comes into play in here, because as you notice, everything is set as 100%, unless you're an opportunity. And then you have the ability to say, okay, what's that probability? And that probability is really based on what's the probability, not the probability that I'm going to win this, but I'm saying that the total revenue is really only going to be 80% of what I'm pitching. I'm pitching kind of high. I think he's really going to come in a little bit lower. I'd like to see it in the forecast more at 80% of this number to be a little bit safe. Okay. So once again, depending on how, using that probability, it's really based on total revenue. Again, we'll go into a little bit more detail on all these calculations. Currency, I happen to have multi-currency set up in my system. So you do have the option that if you have multi-currency turned on, you can look at a forecast in a different currency for all those projects that might be set up in Canadian dollars or GBP, the euro, etc. You can actually view your forecast in those different amounts. Okay. We get into the total. That's really the total budget. This is what it's looking at. It doesn't care what actually happened. I may budget for, 12,805. Actuals, we may be totally overworking the project, or we may be completely under budget. It doesn't matter. All that the revenue forecast is looking at is the total budget. Okay. Actuals are not going to play into this. Prior periods have to do with if my project started prior to June, that first period might have been prior to June. It's just going to total that up into the June month. And then of course, actual billing is anything that you have actually billed on these projects. So people kind of wanted to say, well, my budget was, 10,720. And this is how it's kind of budgeting out, but what has actually already been billed. Now, the fact that I have already done my June billing is why this is showing up in June. Is it changing my June forecasted amount? No, because the actual billing is just saying, let me total up everything I've already billed for you. So you have an idea that you can kind of compare this to this. It is not going to reduce my June amount just because I already did my June billing. The months in here that go forward is really just to say, based on my budget and based on my schedule, what am I anticipating to do? When I look at my May, the fact that I know that I've already billed and gotten my invoices ready for June and my invoices don't need to be approved yet, the fact that I've already billed that and I'm getting ready to send out these invoices for June won't reduce this June number. Okay. Hopefully that makes sense. So actual billing is really just a totals. People wanted to see that in comparison to what have we done. And then knowing that they've billed June or not billed June, this is still what's coming. Okay. When we come all the way to the end, I've got some fields in here that once again, you'll be able to control your grid view. What do you want to see? What do you not want to see? But these are some of the views that I have. Of course, I've got the client, the type is out here, whether it's based on an estimate or not, okay? And then whether this regenerate has to do with this review part. So I'll come back and talk about the ability to send this out to your account managers for review. So we'll come back and talk about this. And then of course, I rarely ever use Office. This is pulling the Office either from the project or the campaign, the opportunity. Is this related to an Office? You're going to also notice too that I have a gross, a net, and a profit. Now, to me, I always say take the profit lightly because it depends on what you put in for net, whether you put in hourly costs, whether you are not hourly costs, whether you put in a hourly cost in your services, and we'll kind of talk about how that is calculated to get your profit. But most of the time, it's usually looking at the net of those expenses that you budgeted for. I have $1,000 in printing, net amount to the vendor. I have a 20% markup. Gross is going to show up as 1,200. Net is going to show up as 1,000. My profit's going to show up as 200. Okay. And again, we'll go into the monthly calculations in much more detail. All right. In our More button, we have this detail grid setting. So you can come in and update the columns that are being displayed and the order that the columns are being displayed. The columns that you cannot touch are the months. That has to be there. If you said that we started this in June, then I have to have June all the way through May of the following year. So you cannot adjust the number of months, okay, that display or do not display, but you can control many of the other fields depending on, of course, how are you going to be viewing this? How do you group this? And, you know, what do you also want to see in the grid and what's most important? Okay. We have the update, forecast, and find new items. Now, these two are very distinct and different, okay? If I have a forecast, I've created this revenue forecast. I had talked about the fact that you can actually send this, the status field, and send this out to your account managers for review. Hey, just created my revenue forecast for the month. I send this out so I can select all these items. I can go notify, which will automatically send an email to the account managers to say, hey, you've got these different items in this revenue forecast to review. I want you to verify that your budget information is correct. Is that truly the total budget? Has, you know, this opportunity now been awarded? Is something changing about this? Has the start date or the number of months changed, or has your project schedule changed? It's a chance to review and say, hey, before I keep this snapshot the way it is, I want you to review your information. Do you have to? No. You can also just select to send certain ones, because of course, scheduled invoices, they're scheduled, they're set for a number of months. Do I need to have somebody review that? Probably not. You know, same thing with retainers. The retainer is a contractual period for a set specified period. Do I need to have an account manager month by month keep confirming that that's still an active retainer? No, probably not. So you can pick and choose which ones you want to send and get confirmation. But what happens is once it's been sent, it actually says here that it's been sent. Let me uncheck this box. It'll actually say here that these have been sent. Okay. And then what happens is if the account manager actually goes in and adjusts the budget information or the schedule or the billing schedule, this field will actually turn around and say, yes, hey, they've touched something on this. They've made some changes to this. We need to go ahead and regenerate this revenue forecast. So as these come back in, you can see whether they've yet been reviewed, because it'll come back and say that the account manager has reviewed it. And then it will, you can look down the line and say, oh, I have a number of these that have to be regenerated, meaning they've adjusted something, either the budget or the schedule, and you would come up here and update the forecast. It will go out and look at those items and say, okay, what has changed? And it will update the budget and it will update the spread of that revenue for those periods. This one will not go out and find a new item. So if somebody says, oh, I just added a new project, you know, you need to get this into the revenue forecast, that's the new find new items. So update just says, hey, if somebody's gone and made some changes, I will update the information in here. Find new items basically says, okay, what items do you want to go find? Do you want the whole entire list again? Or are you looking just for a specific client? And it will go out and find new items and add them into your forecast. If you ever think that you've got a project in here and it's, you know, it was just, you know, the account manager says, oh, it was totally set up wrong, we've done things wrong, you know, or the numbers look kind of funky in here, you know, you can always specifically select a line, delete the line, come back in then, once you've done that, find new items and bring the item back in and let it kind of recalculate completely. So that's also a way that sometimes find new items will work. Okay. Any questions at all yet about kind of the adjustments that you can do? All right, we're going to come back to creating the budget and that adjustment, which happens to be with that one question that was asked about, can I add additional amounts into my forecast? And that's what this add adjustments will do. Okay. So we're going to kind of come back to that. I can print this. It is kind of a long, hope you have a lot of paper, you know, to be able to print that, but you can also send it to Excel, which is kind of nice because then you might want to, you know, adjust it in some other ways. All right. So let's kind of look at our approved project first. I've got my time and materials project. So this one's kind of easy. Now, if you're going to notice that there's also a pencil icon next to all of these. When I click on this, that is simply opening up the estimate to say, okay, the estimate was for 14,400. It's got my, or 14,430. It's got my expenses in there. Okay. And it's got, now, if I wanted to, I can actually click on that and it'll open up the estimate. I have labor, I have expenses, and this is what's coming into my forecast. Speaking about those expenses, how am I spreading those expenses? So it's taking this 3,400, and for me, it's spreading it over 2 separate months. So it's going to spread the expenses evenly between those months. Okay, it's taking the labor based on how the labor is working, and then it's taking the expenses. Now I could turn around and say, you know, if I wanted to move all the expenses to the end, okay, so if you notice right now, it's doing June and July. Based on my project schedule, it's actually counting the number of days in June versus the number of days my schedule is in July. So let me go ahead and show you that schedule. So this is where time and material says, I'm looking at your project schedule and I'm spreading it evenly this way. So I'm taking your budget, and based on the services that you have, based on the dates within the schedule, and then I'm going to spread them based on the way it needs to show up in the forecast here. So when I look at the month of June, okay, I can actually drill in and see all the services that were budgeted for, and basing them on the dates and the amount. This is the total amount of the budget. Okay, so when I look in here, this is how it's coming up with this 8824 based on the number of days in the period. When I look at July, I have a lot less days in this, and based on how what's in my schedule, you know, because I budgeted by task and service. So this is where it's really getting kind of knee deep into this. How did I create my estimate? I created it by task and service. So I have specific services on specific tasks. Those tasks are landing on specific days on my project schedule. My revenue forecast is actually looking to that detail within there. And if you notice, here is that expense that's coming in, or those 2 expenses that are coming in, and they're being spread between the 2 months. Now, if I were to change this and say spread the expenses to the end, and everything has to recalculate. So if we come into this one here, now suddenly that full $3,400 is all in the month of July, because you told me to put it at the end. The expenses are probably not going to be coming in until the end. Okay, that's how the gross is working out in these. Okay, if we go and look at the net, so here is on my estimate, my gross expenses were 3,400. My net expenses were 2,750. Okay. So if I go and look at the net on this one, it's the 2,750 right there for the 2 expenses, net versus gross. How did I get net on my budgeted amount for labor? That has to do with if in your system setup, your billing options in your services, you have an option to set an hourly cost. Now, this might be a blended rate, you know, between all my account managers and what we normally pay them versus, you know, hey, let me kind of figure out what that average hourly cost would be. That's where it's coming up with my labor net on my revenue forecast. So I have time in there for account management, and it's saying the gross is $135 an hour, but the net is $50 an hour. So then, of course, my profit is $85 an hour. So that's how it's coming up with gross and net. So I had 2 hours in here for this task and this service. And so it was $100. And then when I look at the gross on that one, I had the 2 hours at $135 an hour, so $270. Okay, I don't have a net amount on all of my services. I just do it on account management. Then it's easy for me to sit and do the math on all of those. But that's basically what the gross is doing versus the net. The gross is taking that billable amount. The net is taking, if you happen to put an hourly cost on your services, you'll see a net for labor. Otherwise, you will only see the net for your expenses, what's being pulled off of that estimate. Okay. And let me go ahead and change this back to evenly. All right. Now, fixed fee projects are a little bit differently because, of course, fixed fee is saying, I don't necessarily bill based on actuals. I'm billing off of a budget amount. So if we come in and look at this fixed fee project, I have a budget in here for $10,720. That's what it's doing here. Okay. When I look at this project and I go into the project settings and I look at my billing options, it's fixed fee. I do not have this box checked. Okay. And I'm not sure how many of you guys are comfortable with what this actually does, but this is really saying I'm going to take my entire estimate and I'm going to bill that fixed amount and I'm going to bill it according to this schedule. I'm doing either 25% across the top, or I can put in a specific dollar amount. So when I go back and I look at this project here, that's what it's doing in my specific periods. Okay. Fixed fee, this one is that opposite where I've said I have a billing option, once again, fixed fee, but now I said expenses are not included. So those of you who actually bill fixed fee amounts and you have that budgeted amount, when you check this box, when you get to actual billing, the system will say, okay, I know that when we go to bill this project, I'm going to be billing the services, the labor portion, and then I'm going to bill any actual expenses that come in. I'm not billing the budgeted expenses that I did. I'm going to be billing actual expenses. And that's what the system allows you to do when you check that box. It says, okay, well, now I want to just look at the fixed fee for labor because I'm going to be billing the actual expenses. And of course, those expenses are still only going to be spread based on what you have in the budget and how you want them spread. But when you look at the billing schedule, here's the labor budget, here's the expense budget, here's the total budget. However, when it budgets out, it is actually budgeting out off of labor only. And then the system says, okay, now I'll take those expenses and spread them also evenly. So once again, when I'm looking at this one, okay, it's including the expenses. But if I were to take this and say, take all of those expenses and put them to the end, what you're going to be seeing here, you know, if we look at now, it's all just labor. I'm budgeting and billing out just the labor portion, because when I get all the way, oop, did I put it to the end? Why is it showing up in, is it showing up in here? Okay. Well, why is it showing up in the first month? It should be showing up at the end. It's taking it all and putting it at the end. But otherwise, what it's doing is it's just taking the labor only portion. So if I were to actually exclude expenses, and by the way, if you ever exclude expenses on your revenue forecast, and once you've done that, you can't get them back. You just got to go and create a new revenue forecast. Once they're out of the equation, they're gone. So if I were to exclude expenses, then the only thing you would see in here would be that labor budget. Okay. All right. That's the difference between fixed fee with expenses not included, and then a time and material. Okay. If I look down at the potential project, it's going to do the exact same thing. But of course, usually on a potential project, you don't decide whether it's time and materials or fixed fee, although you can. But it's looking at that estimate and doing the exact same thing and saying, okay, it's potential because this estimate is not approved, but I've told it to be included in my forecast. So I'm going to call it a potential, and I'm going to spread it the same way. Okay. Now, when we come to campaigns, we've kind of modified campaigns about a year or a year and a half ago to be able to be pulled into the revenue forecast, as well as to be able to bill campaign budgets through mass billing and fixed fee. So if you're not comfortable yet with campaigns, that might be something that you want to look into, but the options that we have. So I have one here that's a campaign. Okay, I have all my different projects related to my campaigns, and I even have some segments set up. I have gone ahead and set up a campaign estimate. Now, a campaign estimate could be created by just putting in a total amount and saying, hey, client told me I get to bill 135,000. And it might be because you added up all your project estimates together. You know, so I can do it by service only, or I can grab all the estimates off all of my projects and kind of group those, because the client wants to be billed off of this total amount, not off of each individual project, because he doesn't care whether I have 5 projects or 50 projects. He just wants to be billed one monthly amount. And so that's the ability of a campaign to be able to do that. So in campaign settings, I have my estimate for 135,000 in my campaign settings. I'm saying that I'm going to bill the campaign, and I'm going to actually use the campaign budget, the 135,000. And now I have the ability to create a billing schedule just like a project. It's no different. It's going to read it the same way. It's going to go ahead and spread it like a fixed fee project. Okay. I have the same option that I have on fixed fee projects. So again, come in, I have my estimate, 135,000, but this time in my campaign settings, I have said expenses are not included. That means I want to bill the labor portion of my budget, because I'm going to bill the actual expenses as they come in on my projects. So my billing tab on my campaign looks very similar to what it does in a So if I had any extra expenses, I could bill off of that. Okay. The campaign in this one, since I'm saying expenses are not included, when I look at the billing schedule, it's pulling 25% off of this amount as opposed to this total amount. And then the revenue forecast is going to tell me, how am I spreading these expenses, all at the end, all in the middle, evenly across? How do I want to do that? So when you look at the forecast, it's doing the same thing. It's taking the labor budget, okay, and spreading that evenly across. Okay. Potential campaigns work the same way. You take your estimate. So if I look at my estimate, this is not an approved estimate. But if I go into that estimate, so it's not approved, if I go into the estimate settings, I say, go ahead and include this estimate, so it recognizes it's a potential campaign. Okay. Of course, if we look at retainers are very simple. It's just automatically going to take the amount of the revenue of your retainer amount. It's going to spread it evenly out on there. If you have any additional expenses or labor that may happen on your projects that are linked to a retainer, it's not going to include that in the forecast because it's only taking the amounts based on what you said was the amount per period. So if there are any extras that get to be billed, it's just not going to be able to be included because we're not going to know those extras until they come in as actuals. They're not budgeted for, and so therefore we can't forecast that. Okay. Let's see, and opportunities work the same way. So, you know, if I go out to the actual opportunity and I have this opportunity here, I need not only the total revenue, I need the probability. So that's taking 80% of this amount to forecast out. It's taking it based on the forecasted close date and the number of months I'm going to do this. So I think that I can close this by 7/1, and I think it's going to take 3 months to do this opportunity. And so that is how it is spreading that. And it is actually counting the number of days. Okay. Let's see. Do the expenses on media get accounted for in a forecast provided we check include expenses? You would have to have a budget on a media project because really that's what it's forecasting. Again, it's not looking at actuals, it's looking at a budget. So if you have a budget for your expenses, then it can include that budget, but not if you're just looking at actuals. Let me see if I can kind of wrap this up. As you notice, you have these pencil icons. So if you need to make a change and click into this, you can. If you update the budget from here, then just make sure that you update the forecast so that it gets reflected. It will not just automatically update that. If you click on the actual project or whatever the item is, it will jump you to the project and you'll be able to open that. You can always click into the amounts to be able to see how they're calculated and how you spread your budget to know, because it has to go down to that same level that you did your budget. It has to calculate that per month. Okay. Adding the adjustments. This is how you can say, am I adding items or services, and to which client and office do I want to put that to? How much am I doing and how am I going to spread that? So this is that ability to be able to just manually add into the forecast additional items or labor per client. Okay. You can actually create a financial budget. So if you create a financial budget, that will turn around and come down here and create what we call a financial budget. These financial budgets, you know, are really great that you can forecast what you think you're going to do in expenses or revenue. You can do it as a company as a whole, or you can even do it as a specific client to say, hey, for this client, this is the anticipated revenue. When I look at all my clients, it's looking at the total budget. This financial budget can be used in comparison on your corporate P&L. So you can run a corporate P&L and actually compare it to a budget comparison. Where to go? My budget comparison. So I can actually compare it to my budget. Where's my budget? I can actually compare it to my budget and say, how did we do compared to the budget I had created? If you want to learn a little bit more information about that, there is a help guide article on financial budgets in here. I know we're at the end here. Webinar, once the recording is posted, it will come back and post it into here so that you can see those past webinars. You'll always be able to see the link for those within here and be able to watch this at any time. Not sure if anybody has any remaining questions. Hopefully this was helpful. If you do have very specific questions about your situation, then I would suggest creating or contacting your account manager and they'll be able to go through those with you. Okay. One thing I did forget to mention is in a project, So let's say you have a project and your project is set up as time and materials. You can actually say, but I need to bill it as a time and materials, but I want to forecast it as a fixed fee. Don't use my project schedule. Instead, use a billing schedule that I create. Then the system will say, okay, I am going to ignore how you have this set up. I'm going to look at your budget, but then I'm going to look at a billing schedule. Even though your time and materials, you can set that up at the project level. On the forecast level, you can turn around and say, if I'm a fixed fee project, I want you to report it more out as time and materials. You can do that on the forecast itself. So when you do create a revenue forecast, you can actually say forecast all my projects as time and materials, even if I'm set up as a fixed fee. Then it's going to look at the project schedule as opposed to the billing schedule. All right. Hope this was helpful. Please let me know if you have any questions. Recording will be posted as soon as it's available. All right. Thank you guys very much for attending.